tonight. We are back at it with Rich Talk Tuesdays, live with you at 8 o'clock. Last live, we had a lot of issues with people hearing us. So if you can hear us, please press 1. If you can hear us, please press 1. We want to make sure that you guys can hear the information that we're about to provide to you. So if you can hear us, please press 1. Also, invite your friends. Share the video. Like the video.
Share.
Like, share. We're about to give y'all some info.
So get your pen and pad ready.
And let's get to it. Who all in here has Credit Karma or used Credit Karma as a credit monitoring site? Who all in here has used Credit Karma for a monitoring site, or has used it just because? Press 2 if you have. Press 2. Want to get some things going. We're trying to see something. Press 2 for us. Alright, so today I'm going to drop you guys off a couple of gems today. We are going to be learning a lot today, so please tune in. Please like the video. Please share the video so your family and friends can see it. It'll be great for them to get this information that we're about to provide to you tonight. So the first thing I want to talk about Credit Karma is that you guys know that Credit Karma is more of a marketing site than a monitoring site. And what I mean by that is, it's crazy. I know, I just found that my own self. But the thing about it is with Credit Karma, what they actually do is they like to market you when you sign up for their free services and get your credit scores. What they like to do is just market to you different credit card companies that you maybe need or they feel like you may can qualify for. So once you hit that link and apply for the application, they get paid on the back end. So that's their whole funnel. That's what they like to do. They like to reel you in, say everything gets free. So on the back end, they get the kickback of sending you over and making that money on the other end. So that's one of the things they like to do. And another thing I want to jump out in there and to let you guys know that they like to report Vantage scores. They don't necessarily report FICO scores. So, and what I mean by that is, with the Vantage scores is, that's not the scores that the banks and the lenders use to get you funded and approved for that house or that car or that high limit credit card. You would need your FICO scores. So right now,
and the Vantage scores are actually way lower than the FICO scores. I even made the mistake of looking at my Credit Karma score. It was relatively high, and then I went to try to get a car, and they're like, "Oh no, it's this score." And it was like 50 points lower. So
yeah, it's crazy. Yeah. It's not a good thing at all. So we just wanted to share with you that. So if you are using Credit Karma as your go-to monitoring site, you might be let down a few times once you try to walk into that car dealership to get that loan for that car, or get approved for that car, or get approved for that mortgage lender loan. You might get let down. So we just wanted to let you guys know that with the Credit Karma, that's why it's free. They make money on the back end off of you guys because it's more of a marketing site than a monitoring site. I didn't even get to tell you guys that they only pull two credit scores. Did y'all even know that? Like, they only pull your TransUnion and your Equifax score. So, for example, if you log into your credit monitoring account and you see that they trying to solicit or market to you American Express credit card saying that they think you may qualify for it, I just want to let you know that American Express, their lenders only pull Experian credit files, and that's a file that Equifax doesn't even furnish as a credit report to give you a credit score for. They only give you your credit score for 2 accounts. So that's another thing that we want to let you guys know about with Experian. Like, you're not even getting all the accurate information that you need. So it's just important to go ahead, and if you're working with a credit monitoring company, make sure it's not Credit Karma because you will be headed in the wrong direction.
Right, and let down when you're trying to go get that car at home.
Yes, it's so bad. It's so bad. So we just wanted to let you guys know that. And I know you guys probably wondering, like, who is these two girls just giving all this and talking down on Credit Karma? And we're not talking down on them. We're just trying to educate our people so that they can know and make better decisions. And who I am, I'm Aisha Simpson. I'm with Dynasty Financial Services, and this is my partner,
Angel White.
And we are the owners of Dynasty Financial Services, okay?
LLC.
Yes, and we are coming to you to give you Rich Talk Tuesday every Tuesday live at 8 on Facebook. We're trying to integrate our other social medias, but right now we're just going live on Facebook. Okay, so check us out. Be tuning in every Tuesday at 8. That's a great thing. So we're going to jump into what tonight's topic
session,
is
right?
Go ahead and cover it for me. What's tonight's topic gonna be about?
We're gonna talk about the factors that make up your FICO score.
Yeah, and and the reason why we're talking about FICO scores because, like we told you at first, Credit Karma pulls your Vantage score, so they make you feel like that 720 or that 550, whatever you have, there's whatever effect on your Credit Karma account is what your score is, and that's just not true. So we're here to break it all down for you, so you can kind of understand a little bit better about what makes up a credit score, what are the factors that make it up, and how you can maximize in all 5 areas. Okay. So let's jump into it. The first fact, so this chart right here is literally the chart that can determine what lenders use to determine how you can get it to a house, how you can get it to a car, how you get that big limit with American Express. Like, this is what they kind of based your, what's the word I'm looking for? What you can do for them. Like, that's not right. If you want to, this is how they can score you on your life, basically, right. on how you can get funding for their company. So we're going to break it down into 5 different factors, and so that you can get a different perspective of credit scores and how they work. Join, and don't forget, share and send it to your friends because we are about to get to some good stuff. Y'all
get your pen and paper ready. I'm pretty sure we're going to go over a lot of information that you guys didn't even know about. So right. Get your pen and paper ready, and we're about to start. And you not in classes, not in session, but classes in session.
So be ready, okay? Because you about to get some good stuff. Okay, so the 35% of what makes up your credit, it's 5 different factors that make up your credit score. We're going to go by them. We're going to chunk them out and cross them out as we go. And we're going to start with the biggest one, the biggest score factor that make up your credit score, and that's the payment history. And that makes up 35% of your credit score.
Okay, so basically, in a nutshell, payment history is basically the history of late or missed payments. A lot of credit repair companies spend a lot of time, a lot of tactics, trying to basically let you know that this is the most important factor when it's not. Actually, these other factors that we're going to go over later make up 65% of your score that has absolutely nothing to do with payment history. Only the first 12 months of a late payment has a substantial impact on your score, and late payments over 3 years old have a minor impact on your score. Yes. FICO scores are based much more on current behavior than past behavior, so you don't want to spend too much time going over late delinquencies, late collection accounts. That you want to spend more time going over your current and reestablishing your credit from here on out. So basically, if you have a 3-year-old collection account on your credit report, you don't want to go back and pay that, because basically that late payment is now a current late payment. So that has a major impact on your score, and it would actually decrease your score.
Right. So, and just to piggyback off what my partner is saying, I want to try to dive in so that you can get a better understanding. The lowest credit score that you can have is a 300, and the highest credit score that you can have is an 850. So we're going to mark that down on the paper for you so you get a better understanding. So the 300, in my hand, I'm left-handed and my handwriting is bad, so just don't judge me, y'all, okay? And the highest score that you can have is an 850, right? So us as credit companies and you as a consumer to just want to increase your credit scores, the number in the magic, where it happens at, where the magic happens, is in this area. You have 550, and we're going to consider them points of what makes up your credit score. That 550 is the number that you can play with. This is your ball. This is your home court advantage right here. This 550 points, right? So you have 35% of the payment history, which is the biggest piece of the pie of the pie chart, right? You have 35% of payment history that makes up this 550 points. So for example, 35% of 550, because this is the number, this is what we're going to play with. This is our home court advantage right here. So 35% of 550 is, what is it, Angel? Is it the payment history? Is 192.5 for points.
Right.
Okay, so for example, let me elaborate a little bit more so that you guys can understand what I'm saying. So with this 192 points, that makes up 35% of this 550, and the 550 is your home court advantage. This is where you can play to take things home and make everything to your advantage. So with that 192 points, let's just say, for example, I didn't utilize the 30, 15, 10, and 10 of the whole pie chart. I just paid all my bills on time, because you know that's just payment history. So I paid all my bills on time on all of my accounts, reflecting on everything, right? I paid everything on time. If I did that, right, the highest, did you know that the highest score I can have is a 492? And you know that because it's the lowest amount, that 300 plus that 192.5, the highest score I can get by just paying all my bills on time is a 492. Did you guys know that? Like, I feel like once we break it down in these terms, you guys will know better, and you'll be able to understand what makes up a credit score better. To know that with credit repair companies, if they're just telling you their main goal is to get deletions, you know that you're not going to ever get to that 700 or 750 credit score, because if you just make your payments on time, you just utilize this portion of the chart. So basically, your highest credit score would be 492. So if we move on to the next portion, which is the 30% right here, this is called your utilization, and we're going to name it UTI. And this is your credit utilization, right? So what this is basically the amount that you owe. So for example, I'm going to give an example versus telling you what it means, because I feel like the example you will be able to understand better with the example. So for example, if you have a $5,000 credit limit, right? And you decided to go ahead and say you're using $3,500 of that $5,000 limit. You're using over 50% of your credit utilization. So that means you're only maximizing a certain point of that factor, and I need to give it to you. So 30% of that 550, which is your UTI, point wise, we're measuring it off points, right? So 30% of 550 is 165, right? So if you're using 50% of your utilization of that $5,000 credit limit, you're using half of your points, right? And the goal is to maximize the uses of it, like to minimize the usage of it to maximize the score point that you have to give you that 850 credit score, that 720 or whatever you need to get that house or that car or that credit card. So basically what we're trying to say is, if you went on ahead and paid all your bills on time, and you only pay, and you use just 10% of your card, that's what at Tax Dynasty, that's what we coach our credit clients on. And that's basically just to, if you're using 30% of your credit limit line, or if you use it 50%, we're going to coach you on how to bring that on down and use it just 10% or less, because that way you maximizing that 165 points. So let's just say that you dropped it down to below 10%. Now you're able to get that 165 points. So now your credit score is going to be in that 657 to 697 range. Now you're in the game ball. Now you're playing. Because now you're in a position to where you can position yourself to get recognized by lenders and banks, to get approvals and fundings and what you need to move on ahead. So we want to let you guys know how important it is to look and think of it this type of structure, so that you can know, and when you're shopping for your credit repair company, you'll know who to go with. Because you'll know that if their main focus is on deletions, you know you're not going to get to that 700-800 score. But if their focus is on, we know how to get the deletions, but our focus is on educating on you to get you that new positive trade lines that you need on your credit report and moving you on to the next shift, you'll know you're with the right company, because they know credit, okay?
Right. And the ultimate goal is to be less than 30% utilization.
Yes. Because we already talked about 35% of your payment history, even though it makes up the biggest percentage of the pie, it's almost the least factor. It's not as big. It's not a big factor after 12 months of a bad credit history on a file. So you want to, if you have credit cards, it's important to get them balances below 10% utilization, so that way you can maximize that whole 165 points. If you do not have a credit card, if you don't have that mix, you're not utilizing any of these points. So this is like negated. So you're negating 165 points from that 850 if you don't have any credit cards.
Right.
So if you do need credit cards, you need assistance, or you're not sure if you can even get approved for one, hit us up, because we know and we have what it takes to get you what you need. Okay? And I wanted to let you guys know that, because I feel like that's very important. A lot of people don't understand that, and a lot of people look down on credit cards when in reality, if you know how to use them, you can use it to your benefit. Okay?
Right.
So we're going to go to the next one, and that's the 15%.
Which is account age. The FICO calculation has a better score for individuals who have accounts that have been open a long time. Their average age of your accounts, that's how they average your score on utilizing this part. And she'll go over the numbers on this 15% and how much it is, and at a later time. So this means every time you open a new account, the average issued, it will lower your your score, but after you pay it for a couple of months, then it'll basically increase after that time. So basically, so if you have a lot of credit repair companies will advise you to close any additional credit cards, saying that if you have an excessive amount, that it will decrease your score, which is absolutely not true at all. Having an excessive amount will not decrease your score, but just as long as you stay below this 30% utilization, then you'll be in good hands. Yeah, so any accounts that you have open, especially the oldest account that you have open, it's important to have that open and current. Make sure you pay that on time.
Okay. So, and then that 15%, what makes that 15% up of that 550 is going to be, I believe it's 82.5. So for account A, we're going to name it A. We know that this portion of what makes up your credit score is 15%, and that 15% in points terms is going to be 82.5%. Okay? So, for example, and I want to keep saying for example, it's just so that you can apply it and learn what we're talking about. Right. So with the account age, let's just say you were 18, right? A lot of us is 18 and we think like, oh, we're going to go to college, we're going to go to school, we're going to do this. That'll be like one of your first accounts that you open up under your name, and that's going to report on your credit history, right? So let's fast forward to you. Now you're 28 or you're 29. Around my age, I'm 29. So now you got a 10 or 11 credit line on your file, and that's really pulling towards this 15%. So any age lines of credit that you have, it's good to keep them open. Not necessarily close them out, because once you're closing them out, you're negating that 15%, which is less than your 82.5 points that you can take advantage of. So if we move on to the next round, we have just two percentages left, which is the 10 and the 10. And I'm gonna let my partner kind of take over.
Right, and just to go back, touch on this account age. So you want to keep that oldest account open, but any new accounts you have open, like I stated before, it may decrease your score, but all you have to do is keep up the payments on those accounts, and a couple months later, you'll see that increase in your credit score again. Okay, so the next topic for the 10% of your FICO's credit score will be new credit. Okay. So new credit, well, basically, it's talking about inquiries. So the fact is mainly referring to credit inquiry. So when you apply for a new loan, that inquiry will stay on your credit report for 2 years, but it will only affect your score for 1 year. Now, this is an exception for home and auto loans. So for those loans, you have an unlimited amount of inquiries, and it'll only account for one, and that's only for 45 days. So for 45 days, you can go and try to get as many car loans, home loans as possible, but it'll only account for that one loan for 45 days. So
that's very important to understand and notice. So basically, if you are if you're out shopping for a car and you went to one dealer and they didn't get you approved, or they're trying to find, or they're working with their different lenders and vendors that they're working with to try to get you approved, all of those multiple hits on your account will only just reflect as one inquiry within that 45-day period. So just to piggyback on what she's saying, just to make sure everybody understands. Right. So and for this 10% that makes up that magic number of that 550, we have that to be 55 points that you can take advantage of. If you lessen your inquiries, the more inquiries you have, the lesser you are maximizing on this 55 points, okay? So it's very important to understand what she explained to you and what you need to understand, and know that if you're shopping for a car, it's okay to kind of spread your wings a little bit to get that funding and get approved, because it's going to reflect as one inquiry within a 45-day span period. Okay, so we just want to make sure that you guys understood and knew that.
Okay, so the last little puzzle to the pie will be credit mix. Now, these are the accounts that you need on your credit to get you the maximum amount of points possible. And that would be 3 major credit cards. Now, you may not know this, but assigning yourself as an authorized user on somebody else's card does not increase your score. I know a lot of credit repair companies may tell you that, but that is not true as of 2007. So you have to go and apply for yourself a secured credit card, at least one installment account, which can be an auto loan or any type of loan that requires personal property as collateral, and at least one mortgage.
Yes.
Now, if you have more than these accounts, these are the 5 accounts that I just went over. If you have at least like maybe 10 accounts, don't go and try to close these accounts.
Right.
Keep them open, because closing the accounts can decrease your credit score majorly. So you don't want to do that. But if you have at least these accounts open, then they can maximize your credit score major.
Agreed. And that's so true. She's so right about that. And that 10% of that credit mix makes up another 55% of your credit score that can potentially maximize your score. So if you don't have a full credit mix of your file, you're missing out on 55 points, which is equivalent to 10% of what makes up your credit score. Okay, so we want to let you guys know and run that over with you. I'm gonna write it down so just in case somebody wanted to see it, they can see it. I'm gonna name it.
And while she's writing that, installments accounts, if you guys don't have any installment accounts, please hit us up. We can actually help you with that. That's a service that we provide for you guys.
Yes.
We have an affiliate that we work with that can provide you guys with any installments accounts to help you guys increase your credit scores. If you have an installment account, and since you've opened that installment account, you've had a delinquency hit your account, or you had like a bankruptcy or a judgment hit your account, you may want to go ahead and hit us up as well, because you'll need to open up a new installment account just to reestablish your credit and show that you're able to pay your bills on time.
And while you're reestablishing that credit, we'll be fighting that negative item that's on your file too, to make sure that we're maximizing everything. I see that
we have a question.
Okay.
Yes, the question is from Dominic Cottingham. He said, how do I get a correct credit score, and is that a service that you offer?
Yes, sir. We do offer with affiliate that we have a credit monitoring company that we work with as well. Once you sign up with our program, you're able to sign up with them, get your correct FICO score, and that's what we use to delete any inaccuracies that we see on your account.
And I just wanted to piggyback on my partner. It's important to understand that you really don't necessarily truly know your true credit scores amongst all 3 credit bureaus, because all companies furnish information and data differently. So the fact that every company, and it may not be the same company, is important to all 3. Maybe certain companies are furnishing data to those companies, to those bureaus, and I'm meaning Equifax, Experian, and TransUnion. Once the creditors or companies furnish your data to those companies, what they do is it pulls it to another system. And what that system do is kicks out a credit score. So, and it kicks out a number which reflects your credit score. And it's an algorithm that bases it out on each 3 credit bureaus. So if you're ever wondering like why your credit score is not the same amongst all 3, or why it's not consensus between all 3, that's because the data that's being furnished to those credit bureaus is not consistent and accurate amongst all 3. So it's kicking back to you the data that they have. So it's your job and your responsibility, and ours, if you hire us, it's our job and responsibility to go out and detect and notify and figure out those inaccuracies
on
so
your
that we
credit
can get
report.
them deleted off your credit report.
It's important for you guys to go every year. You get a free credit report from each bureau. So I would advise you guys to go ahead and pull those if you haven't already. You get them once a year, and it doesn't affect your credit score at all. So pull those from each bureau, and you can go through, detect any inaccuracies, and if you're not sure what's inaccurate and what's not, that's what we're here for.
Yeah. And I just wanted to chime in and say that if you need a free consultation, or you just want to talk to us more about your situation in particular, you don't want to post a comment or anything, you can definitely, I want to invite you guys to inbox us if you have particular questions. If not, we have a link in the description to where you can go ahead and sign up for a free consultation. That way we can talk to you more in depth about your situation that you may be having.
Okay, ladies, we have one more question, and it's, does my race, age, or where I live affect how my credit score is rated?
Absolutely not. That is considered discrimination.
Yes.
Credit score is not based on your demographics, your racial preference, anything of that nature. It's basically how you pay your credit, your lenders, and things of that nature. It doesn't have anything to do with that.
Yes, that's very true. So if that's something that you were afraid of, don't worry about that. That doesn't have a factor at all. Of course, it's against the law.
Right.
Like she said, that's discrimination. So you shouldn't have that. Or if that is a concern, you can go and negate that because it's against the law. So they can't even do that. So do we have any more questions or concerns?
One last question.
Okay.
Why did my credit score drop a couple of points when I added another credit card?
Oh, because that affected your average account age, basically. So that interfered with the oldest account that you have on your credit report. Mm-hmm. Any new accounts that you have added to your account can decrease your score. But as I stated before, all you have to do is pay on those accounts every month, and then you'll see that score hike back up.
Okay, and that's in a nutshell how it all works. So even if you're working with a credit repair company and they're disputing things on your behalf, and once they get something removed, your credit score decrease, you're like, hey, I got something deleted. Why is my credit score decreasing? Sometimes, we'll talk about this on another Rich Talk Tuesdays, of course, but sometimes you're moving from one tier to the next. So and I don't even want to talk about it to get you guys confused. I just want to let you guys know that it's not necessarily a bad thing for your credit score to decrease once you get something removed, because you may just move from one tier to the next. So once over the next couple of months, you'll see the hike back into your credit score. So it's not necessarily a bad thing if your credit score decreases by getting something removed. Okay, I just wanted to make sure you guys knew that, and you guys are very educated on the things that we provide. I hope that the way that we provided to you this pie chart is something different that you have seen,
right? Because
we really understand credit. We know credit. So for our clients, what we try to do and put in place is everything in any tool that we can think of to get you to your goal as fast as possible.
Right.
We don't want you to stick around in our credit repair program for more than 6 months. In fact, if you aren't there at 6 months, we're damn near going to kick you out, because we're not doing our portion, and we're not doing our part as far as educating and guiding you to getting that 750, 800 credit score that you need. And that's not necessarily all about getting deletions, because deletions is just one part of the puzzle.
Right.
You have to utilize every factor to get an 850 credit score. So if somebody's telling you they got an 850 credit score, it's definitely because they're utilizing every factor and point system on how you can get that 850 credit score. So please understand that. So if you have a 550 credit score, you enter a program and you get deletions, yeah, it can hike up 100 points for sure, but you're not maximizing that score because you're not utilizing all the factors that actually make up the score. Right. So it's very important to understand that and know that, so that when you enter a program, you have the knowledge and understanding that, yeah, they're getting things deleted, but I also got to do my part too. You know what I'm saying? It's a two-way street. It's a partnership. And hey, if you're ready to sign up and get going, we're ready to help you.
Right. We're
so serious about this. We want to help all of our people. We're young. We want to help everybody. I think we have another question.
We studied this day and night.
Forever. So it's really, and the more you learn about it, the more you get more in tune with it. It's just amazing. So, and we're both, I'm so happy and blessed to have a partner like her. We're both headstrong about it, and we're definitely going to take Dallas to a whole new level.
Right. New level. We do have another question. So we do have another question. First and foremost, we can show a little love to our people that are tuning in from out of state. We have people that are here from Michigan, Mr. Robert Walker.
Yay,
we have a lot of people that are here complimenting you guys on your information, complimenting you guys on your shirts and your marketing and how beautiful you guys are.
Thank you so much,
We
guys.
also have a lot of people that are talking about setting up consultations with you guys. So, of course, at the end, we want to get that information about the link link on how to get in touch with you guys and set up their free consultations. And we have someone who also wants to know what are your hours of service and how do we contact you?
Yes, our hours of operation are Monday through Friday right now from 10 to 7. If you could go
PM Central Standard Time.
Yes, because we're located in Dallas. So if you're in another state, we're definitely Central Standard Time. And during tax season, our office hours are expanded from 9 to 9 p.m. So we're definitely in the office. We're definitely here for you. If you have any questions, the link for a free consultation is provided in the description area. So if you don't want to post your questions in the comment section, that's okay. We totally understand. If it's too personable, you can contact or message either one of us or schedule an appointment for a consultation, and we got you covered.
Also, you can hit up our business page. It's also Tax Dynasty Financial Services LLC.
Yes, because that's getting a lot of love too, and we try to put as much content out for you guys so that you guys just get the knowledge and education that you need on credit, because we're here for you and we are ready to get you guys in that house, that car, that new $10,000 credit limit that you probably want. Whatever your goals are, that's our goals. We want to get you there.
Thank you, babe. Okay, we're not going to forget to give it up for Tulsa, Oklahoma as well, you guys.
Hey, thank you guys for tuning in.
So much for tuning in. Please like and share this video. We definitely try to cover as much content as possible to get you guys information that you need, okay? It's very important that you understand everything, okay?
Right.
So I just want to say thank you guys so much for tuning in. Thank you so much. Have a great day, okay?
And be with us next Tuesday for another session of Rich Talks Tuesday.
Live at 8 every
And if
Tuesday.
you guys have any topics that you want to discuss, please hit us up in our DMs and we'll be happy to discuss it with you.
Yes.
All
Thank
right.
you guys so
Thank
much
you
for
guys.
tuning in. You guys
Have a great night.